Hope you've had a good morning and afternoon and had some lunch. We're excited to start our first panel of the afternoon. Sorry, I don't want to be head teacher. So our first panel of the afternoon is Sustainable Innovation Driving the Future for Agriculture. Our moderator today is Smita, who's engagement partner at Mastercard Foundation Fund for Resilience and Prosperity. And just by way of background, Smita has been a partner at KPMG International Development Advisory Services with over 20 years international development experience. Smita is the engagement partner for the Mastercard Foundation Fund for Resilience and Prosperity, where she oversees overall program implementation, quality assurance, and ensures client liaison towards effective management and implementation of the program. Smita also leads various fund management programs with regional, African, and global reach in a range of sectors such as agriculture, trade and investment, resilience and climate change, and inclusive and innovative finance. So we're delighted to have Smita as our moderator today, and I know that she's going to introduce her panel. If you have questions, there will be hopefully time, 10 minutes for a few questions. So do raise your hand. We will pass you a microphone. Let us know your name and company when you do. Thank you.
Thank you very much. I'm really pleased to be here on behalf of the Mastercard Foundation Fund for Resilience and Prosperity. Just as a bit of background, this is the second phase of the fund that we're running. We began the first phase in 2014 called the Mastercard Foundation Fund for Rural Prosperity, and that fund was focused on financial inclusion, and we supported 38 participants across 15 countries in Africa to innovate and scale financial products and services, predominantly among the rural population in agriculture. In the second phase, we're supporting 20 countries across Africa in 3 sectors, which are agriculture, climate, and digital economy. The main purpose of this fund is actually to catalyze enterprises to create jobs, dignified and fulfilling jobs and work opportunities for young men and women. Our main intervention, or one of our first interventions, will actually be an agriculture challenge fund, and that will provide financial support to these enterprises. And as they mature, we will also connect them to financial investors as well. And as KPMG, we're the fund manager for this program. So really excited to be here. And I'd like to invite our panel today to also introduce themselves and provide a very brief introduction and background in relation to your connection to sustainable innovation in agriculture. So starting with you, Eren.
Thank you very much. So my name is Eren Kelekci. I'm working at the African Development Bank. I'm not sure I need to introduce in details what the bank is doing, but we are a financial institution owned by 81 countries, among which 54 are the African countries and 27 are what we call the non-regional member countries, so mostly European, Northern American, and some developed Asian economies. My task at the bank is to lead the investments and financing operations from the perspective of the private sector in food, agriculture, and forestry. I'm based in Abidjan, Ivory Coast, and I'm covering the 54 countries.
Thank you.
I'm Nimrod. I'm the managing partner of Vital Capital Fund, which is a private equity impact investing fund. Prior to becoming an investor, I was managing an agribusiness company, working mainly in Africa and in other emerging markets. And much prior to that, I'm the son of what you call today a smallholder farmer. So I know with my hands and my heart the pain points and the challenges and disempowering states that smallholder farmers come from. And in Vital, what we do in food in agri is all around the smallholder farmers.
Imran.
Hi, everybody. Thank you for joining this session today. I'm Imran Patel. I'm director at Verdant Capital. We're a transaction advisory firm, investment bank. We support enterprises, companies, entrepreneurs across all sectors, but particularly also the agri sector. We work with medium-sized to large companies in help reduce food imports, import substitution, but as well as food security and sustainability across the markets we work in Africa. I'm based in Congo, I'm from the Congo, and what drives my passion in agriculture is that growing up we were not dependent on imports for food, and today, as Nimrod also knows, and Eren, and I guess everybody else here as well, it's largely import driven, and we are working very closely with agro industries as well as with smaller companies that are trying to address food security across the value chain, and we provide them with advice, expertise, and bridge them to the right sources of capital and structure it in a way that it is sustainable. And then we also layer in support from various providers of technical assistance, capacity building to really revive the food production sector.
I'm Werner, Opperman. So I'm from a company called Agrarius. We are a JSE listed entity. Our focus is to transform the agricultural economy from an extractive economy to a circular economy by mobilizing pools of capital to the right projects that have both investor return targets as well as the impact goals, fully customizable to each impact we want to achieve. And our focus now is to expand our capital raising facilities by listing on other exchanges to be able to pool capital exactly to emerging markets where there's a need for this capital, as my previous panelists pointed out.
Right, good afternoon, everyone. My name is Jonty Rawlins. I'm working on a variety of projects to try and build incentives or market incentives to drive finance to support climate and nature, with a particular focus on developing climate-smart agriculture. My role is as the head of sustainability for the Platcorp group, who are an innovative, impact-focused microfinance holding company that works across sub-Saharan Africa with a particular focus in Eastern Africa. My role in agriculture has been everything from consulting on large donor-led programs through market development and creation processes, all the way through now to innovative financing processes and models to bring in the most underserved populations into the formal economy.
Great, thank you. And Jonty, you mentioned climate-smart agriculture, and climate is actually one of the biggest factors affecting sustainable innovation in agriculture. What are some of the challenges that you've seen, particularly in that area, particularly in relation to food security or energy transition?
That's a loaded question. The climate change challenge to agriculture in Africa can't be understated. If anyone here is familiar with any of the IPCC work or any of the IPBES work, we know that the industry and the market is under severe pressure. Not only in the long term, this is not 10, 20 years we're talking about right now in the next 2 to 3 years of investing. So particularly to come down to some examples, significant changes in rainfall patterns, changes in average temperatures, and particularly soil health through things like changes in vegetation and oxidative content, all the way down to affecting how erosion happens and then flooding in certain areas, has disproportionately affected smallholder farmers who don't have the capital needs or capacity to manage these single events, and particularly if you have a crop failure one year, often can't afford to grow in the next season. So, I mean, we can get into the devils in the detail, but climate change is really bringing home probably the most obvious impact through the water cycle for farmers. So the most obvious one is too much rain or too little rain. And it sounds like a problem we've always had, but the unpredictability has increased tenfold in the last 5 to 10 years.
Great, thank you. And Eren, how have you seen some sustainable innovation actually addressing some of these challenges that we're seeing?
Yeah, I think, Africa is a continent, but there are very different cases, and countries are very different, and there are even different things within countries in between value chains that we are talking about. So it's difficult to give a summarizing sort of answer for the whole continent. But I would say that overall we've seen some momentum in the adoption of some of the technologies around agriculture or sustainable agriculture. I would maybe mention 4 of them. And again, it's very different if you're talking to a commercial farmer, an emerging commercial farmer, or to a smallholder farmer. The cases are very different. But I think the first one that I would mention is probably all the innovation around crops, crop varieties, and the diffusion of climate change sort of resilient crops. And we have a lot of programs at the bank who are supporting those. I think if colleagues here have the chance to look at the case of Ethiopia and what we did through a program we call the TAD program in terms of development of those new crop varieties around wheat and maize, I think it's very interesting. So that would be the first one. The second one would be around all the techniques around precision farming. So that would be more driven to, let's say, commercial farmers. And another case would be what we did in the sugar industry in Egypt, which is a huge market still importing from outside. The third sort of axis of answer would be around sustainable practices. And probably, because I don't want to maybe talk, yeah, exactly, would be on the use, and this is very important for smallholder farmers, of digital farming tools or digital ways of managing farms. So these are probably the 4 ones. However, that being said, there's a big diversity, and there are still a lot of challenges in terms of accessing resources and accessing proper infrastructure in some of the countries.
That's great, and I think the point that you picked up about, of course we talk about Africa, but each region is so different. Imran, from your perspective and the region you're working in, and luckily we're well represented here on the regions that you're all working on, but what are you seeing in this space as well, and some of the challenges?
So Congo, as I said, we need a revival in agriculture. It was very heavily, the economy was made up with significant agri players up until, let's just say, the 90s, when certain events occurred and the production base was almost entirely destroyed, if not abandoned. Eren, outlined, from a smallholder perspective, key aspects of what is really needed to drive sustainability in the smallholder sector. But he touched on one that crosses over to even the larger scale producers, whether it's intermediate stage or very large stage, is infrastructure. The problem in the Congo is not necessarily food production, it's accessing the markets. There is plenty of production across the country that's very fertile that just doesn't access the market because you don't have those access roads getting to the main roads that lead to wherever a market may be. So you have this stranded production that just unfortunately rots, and it's really painful, at least for all of us here, I assume, but particularly for us who are there. So we need infrastructure to allow this production to access markets, but we likewise need infrastructure to allow to bring in the necessary equipment, whatever else is required as inputs, including any form of capital, human or other, to strengthen the production base and then bring that product back to market. In addition to that, you also have other basic needs, that Eren touched on, but even when it comes to more integrated or commercial operations, provide the basic understandings in terms of variety of seeds, of inputs, what are the better, let's just say, agrochemicals to be used so that it doesn't further pollute or damage the environment, whether in the near or long term. So it's more basic, I would say. As, of course, the operation becomes more sophisticated, then you would need those more advanced technologies or techniques to help further optimize and just do better and lead as examples for all the others. And then I think there needs to be a lot more innovation or introduction of current techniques for processing. We can have primary production, but what about the products that you buy in the supermarkets? Those will still be, like processed products. Those will largely still be imported. So we need to facilitate such a processing business and stakeholders in that part of the value chain to then, provide the products and be able to sustain themselves and scale but also, meet the needs, the varying needs of the different segments of the market. So the list goes on and on, but I think this would suffice.
And you've touched, well, many of you have touched on technology, and you talked about the basic, infrastructure, but then technology is an enabler, and particularly climate smart technology, talked about digital tools. Perhaps we can explore that a bit more on how technology can drive sustainable innovation in agriculture. And Nimrod, it'll be good to hear from you, from your experience as well, where you've seen this work really well.
So, from the eyes of the smallholder farmers, because that's where we invest in, it's a total game changer. The core, what Imran and Eren mentioned, the core is, you get better seeds, better fertilizers, drip irrigation or better irrigation, you double or triple your production and your productivity. That's only the core. Before that, technology will allow you to have, through GIS, a title on your land, which a smallholder farmer would never dream of before. And then you're banked. The technology would have you banked. Okay, mobile money, you can buy, you can get credit. So that's even before, that's not even agri-technology, but that's enabler. Technology will allow smallholder farmers to sell their product and get in Kenya money through M-Pesa. No cash operation. It's good for the farmers. It's good for the corporate or the investor. There's no leakage there. It's all very traceable. Technology will allow these smallholder farmers an access to market. And if you do agro-processing, again, through not high-tech, but agro-processing technology, there will be much less post-harvest loss. So you can immediately absorb all the production from the smallholder farmers and transform them into something that can go to market. So it's just a total game changer. And I haven't mentioned anything which is high-tech now. It's all, I would say, evolving technology, some in the core of the production and some around. And that's one sector, but we've seen exactly the same with milk producers in Uganda, with layer chicken producers in Angola, with macadamia producers in Kenya. It's all the same. You improve the core significantly in terms of production, and then you improve how you approach and what you have as a small businessman and how you can access to market. That's a total game changer. Our challenge is that the model works great, but how do you make it scalable?
Yeah, I suppose that's the big funding question as well that we're going to come to. But before we do that, Werner, particularly from your perspective in Southern Africa as well, and you've been involved, I think, in launching some fantastic investment as well there. Where do you see technology playing a role in sustainable innovation?
So from our perspective, we do large commercial farming operations to a large extent, also smallholders, but mostly focused with large commercial farmers and then via osmosis filtering down to the small-scale farmers. So we break it down, first of all, I call it vanilla technology. So it's just more efficient irrigation, like from micro drip irrigation, when you do it, what time, measuring your water usage at spots and to precise precision irrigation. It's also linked to your fertilizer cycling. Now, using satellite technology linked to tractors and in precision farming, we can now plant a seed and within an accuracy of about 2 centimeters, put fertilizer next to it. So you use a lot less, so enhance your efficiency. That efficiency filters through all the way to the back the whole supply chain. So that's just your basic vanilla technology needs having influence through it. But as the commercial farmers are adopting the technology, the services support is coming through to the rural areas. We send filters through to the small-scale farmers, especially the commercial farmers are working on subsidizing or supporting the small rural farmers around them. So that's the vanilla focus about it. What's also quite nice is renewable energy. That's become more affordable. We probably all know South Africa has current significant issues with power generation, load shedding. Even in the big cities, you can have 12 hours of no power on a consistent basis, which created a lot of capital to find solutions for energy. So there's a lot of investment into energy production and solar panels, and that's happening now is it's going to decentralize. So now any person can basically buy solar panels, connect a pump to it with a battery, and on a small farm, he can do, instead of having miles and miles of cabling, he can electrify his farming operations. It becomes immediately efficiently. But secondly, linked more to commercial farmers, then biomass is becoming an energy source now because it becomes fundable now to do it. So it's more technology for biomass coming through. But the biggest thing that we're seeing, and it's actually an opportunity for Africa, we tend to be more a warmer area than other parts of the world, and assuming this climate change leads to global warming, our plants are more adaptable to a warmer environment. So new cultivars being developed in Africa, which we're actually involved in. We're actually testing it here in the UK now and testing it in Germany. We've got thousands of trees being planted now in Serbia, linked to African cultivars. So that creates a massive opportunity for us, because this is cultivars designed to produce a fruit for a new world taste. So smaller fruit, easy peelers, highly transportable, right taste, and lasting long. That's from a biotech opportunity that we as Africans have. And something that's often overlooked is financial technology, innovation now to fund activities. So developing new investment solutions, new funding solutions that's linked to the needs of a farmer, not to a 30-day or 60-day cycle, but linked to the actual biological cycles. And that's unlocking tremendous potential, what we need to focus on.
Great, thank you. And looking at a lot of these areas, the climate smart technology, the infrastructure, the different value chain processes, all of that needs finance and investment to help scale and to even provide solutions as well. And a lot of it is through innovation. So I'd like to move our conversation to see how finance and investment does support innovation in agriculture. And I'd like to start with Imran on what kind of financing instruments have you seen to be successful to support these kind of innovations?
It varies across the structure, and you really need to see what that particular market needs, what are the gaps. Let's just speak about Congo. It's my favorite country. So you need every support in funding from smallholders all the way through to the large integrated agri-businesses. Starting with the smallholders, grant funding is very helpful. You just need to identify how you would appropriately deploy that funding, put it in the right hands, ensure that the deliverables are fulfilled, and then the recommendations are implemented to then bring a lasting effect for them to then graduate, carry on, and access available market solutions such as what Platcorp may provide in a market that they operate in. And then as those cooperatives or smallholders grow, they can graduate to other forms of funding. If they go into exports, they can benefit from invoice discounting or other sort of supply chain financing solutions through local or international lenders. When you get into the enterprise side, medium to large, anything from blended finance, where you blend, subsidized, let's just say, funding with market funding to balance out the effects. And it's not just on pricing, it's also on tenor, on amortization, repayments. And then when you get into the larger enterprises, such as some of the clients we work with, you look at how do you package for their overall CapEx requirements. Are they looking to raise funding to go into the primary side of their business, into infrastructure such as irrigation or processing, or maybe even on the distribution side? So you have, when you enter that realm, there are a lot more sources of capital. It's more diverse because it's seemingly de-risked. So yeah, there's just that much more, many more options. And even then, it's not without challenge. We have to, as advisors, we work with our clients to guide them and manage the conversations with the sources of funding. They'll always want to push their terms, but then you have to adapt it because often there are misperceptions of risk. Agriculture is already seen as risky by many players. It is not without risk, but then you have to really identify those risks appropriately, ensure that they're perceived in the right manner, and then reflect that assessment into the overall structure of the funding.
Great, and you touched on grant funding and that early stage funding, which is something actually this Fund for Resilience and Prosperity will be doing as well, just to help leverage further funding and actually manage some of those high risk and invest or at least catalyze the maybe high risk or perceived high risk SMEs so they can innovate. I think with innovation does come risk, so it's trying to balance that out as well. So from Eren, your perspective, and obviously through the bank as well, I think similarly, you use these different models. What have you seen work really well?
Look, I think first of all, there is a huge potential on the supply side to actually make a lot of African countries sovereign from the perspective of their food production. But as we say in the bank, you don't eat potential, right? So in that context, in order to transform that potential into concrete supply, if you take the case of commercial farmers, or let's say sizable businesses that we, to some extent, for our direct lending, focus on, because we believe that they have the capacity to create the volume that is needed in these countries. I think what's very important for us is to be involved at the very early phase of the project development, so that we don't just provide financing, but we provide upstream pre-financing advisory during the project development phase on the environmental, social, developmental, and climate-related streams of the project. And we can even fund or pre-fund that from time to time based on some of the grants and donor funding that we have internally. So very important to be involved very early stage, to de-risk the project, to make it potentially a transaction for us, but also for any other DFI, and then to catalyze others to come up with you. So it goes through some of the technical assistance vehicles that we have. It goes through blended structures that Imran referred to. And it's basically aiming at creating a market where commercial lenders could be able to finance and invest in. So that would be for, let's say, sizable businesses. For smaller farmers and for peoples like Nimrod, I think there is a whole work to do on the ecosystem. Obviously, we can't have on our balance sheet farmers with 1, 2, 3 hectares of plantation, and we can't finance them directly. But we have to work with the other players of the ecosystem, cooperatives, aggregators, exporters, companies which are involved in the transformation of that primary production, but also end clients, final clients, to basically use those different parties as vehicles to basically to be conducive for our financing to reach the final user of that finance, which is the farmer. And we have very interesting cases. One of them is in the vanilla value chain in Madagascar, where we are basically developing also a capacity building program in terms of sustainable agroforestry, supporting smallholder farmers producing vanilla, but going through the end clients, which are either basically food companies, which are using the vanilla as food ingredient, or cosmetics, very high-level cosmetic companies which are involved into the use of vanilla coming from Madagascar.
Great, and even this is one of our learnings from our first phase as well, which is why we've added technical assistance into the second phase of the program, that while we're giving funding, that technical assistance and capacity building needs to go hand in hand, I think, to just make sure they can catalyze correctly in the right way, and they don't get held back in their growth potential as well. So great to hear that.
And I just forgot to mention, because it's been referred to with the input providers,
yes,
fertilizer companies, because in some instances, in some countries, because there is a lack of proper input for farmers, it has a very bad consequences on the quality of the soil, because people are using whatever they can, and sometimes it's not the highest quality that
Yeah, thank you. One of the things that was mentioned by Imran, risk and perceived risk as well, especially when we're investing in agriculture in Africa, often perceived versus actual risk that we find on the ground. How do you think the agriculture sector can be de-risked to attract more private sector investment? And I could start with Werner, based on your experience.
So I think we need to put quickly in context the size of our challenge. And we have to step back and look at the macro level first. If we talk about 7 billion people in the globe, plus minus, they need agriculture for at least for food, but also for fiber and for fuel. So there's tremendous demand. So the amount of capital needed is significant. A typical transaction that we do for a commercial farmer, not a large one, just a decent farmer that's sustainable, it's about $5 million. That's the amount of capital we need to go into it. So the vehicles that we need to raise the capital needs to be very efficient. And we need to raise that capital from the private sector. And as you all mentioned, risk is the critical first thing they ask. So yes, blended finance and grants is amazing. It helps to get going. It can be a first loss tranche. But the first thing we need to do is we need to establish tradable instruments. So people say agriculture is illiquid, you can't get out. But if you package it into an instrument that's listed, it becomes tradable. It's not very liquid, but immediately the illiquidity risk can be addressed. It becomes tradable. Next, what we need to do is we need to package all this, I call it harvesting, agricultural risk premia, into an investment vehicle. So your investor now can get a return profile that's uncorrelated with any other asset class they can invest, be it property, be it equity. So from a portfolio perspective, on the investor side, he is diversifying his risk, he's reducing his risk portfolio by actually investing in agriculture, which is seen more risky. How do you do it more practically? How do you de-risk the instrument? People always forget. One, as a rule of thumb, every unit of currency generated at a farm gate, let's assume it's $1, generates plus minus 8 Rand across the entire value chain. So you can risk 1 Rand at the farm gate, but link your repayment to further down the value chain of whether it's 5 Rand or $5 or $8. So your chance of losing your full 1 Rand is quite low. The minute you diversify it across a few industries, across different cultures, different areas of the world, linked to the same commodity even, your risk reduces significantly. And quite quickly, you'll basically build a portfolio backed by real assets. It doesn't have to be property, it's commodities, it's tangible commodities. Commodities can be stored, easily tradable. $1 that you put in, $1 you put in is covered 2 to 3 times in the real assets, backed in a listed vehicle, and that's the way you can channel literally billions of rands, billions of dollars into your agriculture, be it for large commercial farmers down to your smaller farmers. And that technology exists and it's doable.
Great, thank you. And Jonty, from your East Africa perspective as well, how are you seeing more de-risking happening to attract private sector investment?
Sure. So first of all, I would like to say I can't agree with anymore. We have to find ways to incentivize private capital into these systems. And I think a lot of the commercial entities that you're operating with, I think that the technological pathways there, renewable energy, climate-controlled agriculture, sustainable inputs, etc. I think with access to capital, that's quite a linear process that they can follow towards profitability. I think the challenge comes with, and we need to address the elephant in the room, with those farmers who are providing 70% of food supply in Africa, and those are smallholders. How do we actually attract private capital into smallholders? I'm tired of discussing this donor-based support. If any of you have spent much time in East Africa, it's incredibly difficult to manage donor money with farmers at the moment. There's a big disconnect between markets and how money is spent and how patchy it is. It's not helping in many respects to catalyze investment at scale from the private sector. And I think that the elephant in the room is the truth, is we need to look at grants like subsidies. If we compare Africa to the EU, EU is looking at about 200 to 215 euros per hectare per annum as a subsidy. We shouldn't look at grants, I don't think, any different, but we should use them to catalyze more investment. So how do we do that? What Werner said in terms of packaging into instruments that can be traded, can be liquid, is an incredibly good idea, but how does that work on the ground? In terms of East Africa, there's been an explosion in investment in agricultural value chains, so in processing, in logistics, etc. But the primary production, particularly with smallholders, has been left behind. This has created a big problem for many factory owners, for many processors, for many suppliers. You might have seen there was a big social media uproar earlier in the beginning of the year in Kenya, where they called it KFC Gate, where KFC was importing all of its chips from Egypt or from Europe. its potatoes into Kenya, despite Kenya having a fairly moderately developed potato value chain. But the problem is there's not one processor in Kenya who could meet the food and health and safety standards. So now we get 6 months or 12 months later, there's been 3 investments into Kenya that have developed sufficient processing standards to actually meet KFC's entirety of their demand across the whole country. However, there's no potatoes. The species or the variety of potato called Shangyo Shirikia, the 2 varieties that are primarily grown by smallholder farmers, they can't be processed. They're used directly for eating on the plate or for boiling. So these types of disparities, how do we connect people to market? How do we get them to grow? So for example, some of the potato value chain options or varieties such as Unica or Marquise that can be used by KFC are incredibly difficult to grow. They require different types of inputs that are more expensive, require more attention to detail. So coming back to the question on de-risking, it's a difficult question, but we need to be honest. We need to be using grant money in these instruments as first loss tranches, as guarantees, as insurance. For smallholder farmers, if you can package groups of smallholders through a microfinance option or through different listed or packaged options where we can invest, they're insured. We have created the opportunity for them to bargain and give access to markets so they're not at the mercy of traders who come to their gate and offer them half the price of their produce. This is the future, and I think we need to move away, perhaps a contrarian approach, but move away from these kind of patchy approaches towards smallholders where we give a package of inputs over there and then we do another program here on value chains. We need to look at a centralized mechanisms where we can, at large scale, bring money into the system.
Thank you. That's really great to hear, and actually, I'm happy you brought that up because that's exactly the kind of model we're using in Fund for Resilience and Prosperity, where we're looking at the holistic approach of access to finance, access to markets, human capital, supporting environments, connecting to investment, as well as the policy environment as well. Because I agree with you, just giving the money without it leveraging other money or investment in a holistic way won't help. And something we did do in our first phase actually was support financial inclusion for smallholder farmers, and 171 new products were actually created to support that, to enable them to then get more access and to scale as well. So great to hear from your perspective as well on that. I think, well, we've got a few minutes left, so happy to take some questions for the panel.
Okay, thank you. Interesting conversation. I think one of the problems when investors are investing in Africa is that they treat Africa as if it's Europe or America, and they have the same attitude when Africa's starting from a low place. And when they do invest, they invest in large farms, and that's unfortunate because the majority of producers are smallholder farms. So I'm wondering, so it's good to hear the bank and Mastercard and others say that we need to encourage investment into early stage. But I'm wondering, how do you invest more into early stage? Because then all you're doing is encouraging, you're making the big guys bigger, and then the small guys remain small. And is that really going to help the continent?
Maybe, can I ask Nimrod actually to comment on that one? And I know he had an answer on the risk question as well, so maybe you could do both.
Sure, I'll be happy to answer. At least from our perspective, we invest only in models that deal with smallholder farmers. So we don't do any commercial farms. We have 3 principles. 1, it has to be smallholders. 2, we don't want to compete with producers. And 3, we want to have skin in the game. So it's either we all win or we all lose. So I totally agree with you. The focus needs to be in smallholder farmers, or some of the focus needs to be in smallholder farmer, maybe in mix. And I think not to compete is a very important principle, because you can easily create commercial farms that will just wipe out all the, economy of scale, wipe out all the smallholder farmers. So we're focusing only on that. I think you can make enormous impact, and you can also make good money as investors if you find the right models of smallholder farmers.
And how have you de-risked these investments?
Life is short, and private equity is even shorter, and the clock is always ticking. So we don't have time to create ecosystems, but I can tell you where we go in. So maybe that will give some hint on where would private capital come in. So first of all, we have to look at our job. Looking at technology, is it sustainable? Is it affordable? In our info invest mail, we get, I'm growing salmon on the roof of Dubai, let's bring it to Africa. I'm producing in this whole vertical farming enough for a village, let's bring it to Africa. It's great, and it's happening, it's true, but it's not affordable. So the analysis of the unit economics with actual practical market price, this is our job. This is one. From the ecosystem, we don't like entering into the middle of the value chain. We want to take some part until the end, from the farm to fork. So we want to take half or a third, but jumping into the middle is kind of risky in places where the ecosystem is not developed enough, and in many places value chain is not developed enough. And infra, what Imran said. Where there's no supporting infra, and the government promised that there will be a road, etc., etc. We've done this mistake enough times not to do it again. When there's no basic sustainable infrastructure, I think private capital will never come in.
Thank you. And obviously that's from your on-the-ground experience, Werner.
I would like to add to it. So step one is get the capital. So we compete aggressively to get capital for agriculture. We're like the stepchild. So when I go to investors, I need to convince them, don't give all your money to Tesla or any sexy new deal. Give me a small portion for agriculture. So that's the first point you need to do. So I need to compete on returns and risk. So we're managing to achieve that. How do we get the money to small-scale farmers? We've got multiple models. So we find it's better to work with large commercial farmers and give them terms to the capital. So we go for, let's say, a project where we do abattoir. We fund large commercial abattoirs, guys who prepare food for Burger King, for the glass guys. Say, guys, I'm giving you a capital. Some of this capital, let's say 10%, needs to go to small-scale livestock rearers, but there's conditions to it. You need to give them support. So you need to set up collection points. At a collection points, you need to have equipment there to store the animals until it makes large enough to collect them, but you also need to go and buy out all the bad bulls and donate right bulls to improve the genetics of that herd on a continuous basis, and we monitor and manage that. Other models we do is we go to the commercial farmers and say, guys, there's an area around you, there's land available, go talk to the community, rent the land from them. So the community immediately gets income from rental income. Then you start farming that land, employ the people, upskill them with the idea that these guys become farm managers rather than farm owners. Other models we do is you've got large commercial farmers clubbing together, pool the resources to buy a new farm. And they do it 3 or 4 times, they split and make a new farm. We say, okay, bring in a small guy who's been proven to be able to farm, we'll give his capital portion to you. Until you've got your sale, spread out your good size. We need to get not just our small-scale farmers to commercial farmers. That's sustainable. And that's how you can do it, compete for capital and build large, successful commercial farmers from small-scale farmers.
Great, thanks. We have one more question.
Hi there, my name is Julia Hawkins from Hawkins Capital, and I suppose my question is almost directly opposite. Let me just say, so I'm raising capital for a company that, well, it's a project, it doesn't exist at the moment, so greenfield. Now, as soon as you go to an agriculture investor and you say, I have a greenfield project for you, then everyone scatters and it's kind of, okay, we're not touching that. And the thing is that, I suppose my question is that the only thing that matters is smallholder impact, smallhold farmer impact, is that the only thing that matters? I mean, if we have here a hydroponic farm, which is exactly the project that I'm talking about. It has very high returns, which I understand is not the criteria for all impact investors, but I mean, it can't hurt to also make money on your investments, right? And it has huge impact in terms of 1/10 of the water that is being used for traditional agriculture, 3 to 5 times the yield. I mean, you have no seasonality because you can grow all year round. Not to mention that you don't have to use any herbicides, pesticides, or insecticides. And they're creating 250 jobs with doing that because they're going to one of the poorest areas in South Africa and setting up this. So I suppose, point being, I'm not trying to make this into a huge pitch, but point is, I just, for the life of me, cannot, and I've worked with many projects for many years, and this has been one of the more challenging projects to raise equity for, simply because it falls between infrastructure and agriculture. So the agriculture will go on the debt, on the equity side. They go, well, no, sorry, it doesn't have smallhold farmer impact. And then on the debt side, it's actually been really easy. And on the infrastructure side, it's kind of, well, it's not infrastructure. It is infrastructure, it's very capex heavy. But I mean, how do you see something like that? Is there just is there no future for anything else than traditional farming? Is that the only thing that we want to go for? Or is there a future for alternative and probably more like on a higher scale other technologies such as hydroponics? Thank you.
Thank you. Great question. And this is about sustainable innovation in ag, so looking at new ideas. And Eren, is this something you'd like to tackle?
Yes, I think, I think any food-related project that we see in Africa cannot be dedicated only either to a primary production of a crop or distribution, or we cannot segment the value chain as such. So any of the projects that we are doing has an energy component, has an infrastructure component, has a primary production component, and more importantly, an integrated transformation component. Now, the question of the greenfield is a good question, but there is greenfield and greenfield, right? So there are ways, and I'm saying you this, I mean, we don't go into direct equity, into corporate direct equity transactions, but we look at them from a debt or guarantee perspective. So in that context, I think there are many different ways to de-risk a greenfield transaction, and these are all connected to the role of the operating partner, the track record of the operational team, the nature of the client, the contractual framework that you have within the project in terms of how you draft your service providers contracts, your construction contracts, your maintenance and operation contracts. So there are many different ways of mitigating the greenfield risk of such transactions, but these need to be worked with an institution who can involve teams doing that with the sponsor and the advisor of the sponsor. So that's what I was referring to previously as the pre-development phase of the project, where you have to put all the things in the right combination to make the project potentially a project that either DFIs or commercial lenders can finance.
Great. Thank you. Thank you so much to the panel. I know our time's up. That was a great discussion, and I really appreciate your inputs. Thank you very much.
Thank you very much. Thank you.
Thank you, Smita. Thank you to the panel.